And good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the NASDAQ 100 being recorded on Friday, September the 12th at 3:20 p.m. Pacific Daylight Time. I'm going to start here on the NASDAQ cash market, the NDX, and this is my largest picture that I have available. And the data goes back to the start of the NASDAQ 100, which was in October of 1985. Prior to that, it was the NASDAQ Composite, and then they kind of broke it off, and a lot of the tech stocks formed, and they started the NASDAQ 100 index. Now, so there's not as much data in the NASDAQ as there is, of course, or trading as there is in the Dow and the S&P. So although we are finishing a third wave, it is not of a cycle degree. It is of a primary degree. And so, as notated, so we have primary one, which was the top, the high in 2000. And then we have the dot-com bust, which produced primary wave two. But this is sort of like the NASDAQ's very own crash so far. We'll see how it does in this primary fourth wave that's coming up, but it should not look like that. In any case, primary wave two. So we're still in primary wave three, and it's going to have five waves of intermediate degree, of which we have one, two, three, and four. So intermediate wave five is still underway, and now we can take this down now to the 5-year weekly chart. And there we have intermediate wave three, intermediate wave four. So here we are in intermediate wave five, which will consist of five waves of minor degree, which we have one, two, three, and four as complete. And I'll take this down to the daily chart. And there is minor three, minor four. So we are in minor wave five, and it'll consist of five waves of minute degree, of which one, two, three, and four are complete. So we are in minute wave five, of minor wave five, of intermediate wave five, of primary wave three. So we're close. We are getting close to just setting the stage for that larger, a little bit larger correction. In fact, let me go back out to that monthly max. And actually, I can do it from here. And what we can see is what we're going to be correcting is accordingly, Elliott teaches and continues, and I continue to pass along, that a fourth wave once underway will find its terminus or its endpoint within the fourth wave of one lesser degree. Well, if we're coming up in a primary degree, third, then for primary wave four, it should find its endpoint, the terminus, within the price territory of the intermediate fourth wave. And that's it right here. So what we have is that fourth wave bottomed in October of 2022. So we're basically just correcting back to that level. Whereas in the Dow and the S&P, we run the same fourth wave that it go back to is of primary degree, which is 2009. Now, if we had to go back to that low here, it could. Can't say that it wouldn't, but that's going to take us back to here, 2008, 2009. So same deal, but it's just intermediate wave two. And I've not really known a fourth wave which kind of comes down and finds its endpoint within the price territory of the second wave of one lesser degree. But if equality is something between the markets, then this, I don't know. We'll have to see. We will definitely have to see because we'd be looking for a much larger. And here's the other thing. If it's a primary third, cannot overlap the price territory of wave one, which that high sits at 48.16 in the cash. So that's why I think it's gonna come to here. And all kinds of things can kind of really occur and support, the market finding a bottom at a higher level, or, continuing not to drop as far or as quick as the other two. And but we're going to have to wait and see, to be honest with you, because it's not a rule. It's a guideline that the fourth wave of one lesser degree would be the support. So it's a guideline. And as we know, there have been many changes, and according to that I have found in Elliott wave labeling, particularly in wave two, where I'm seeing it more as an irregular B wave. I see that often. But the major rules that continue to stick are that four cannot overlap wave one. Wave three cannot be the shortest wave out of waves one, three, and five in an impulse move. It doesn't always have to be the longest, but it cannot be the shortest. And that's like a do not break. So wave four overlapping wave one, do not break. Wave three being the shortest out of one, three, and five, do not break. And then the additional one is that wave two cannot exceed the starting point of wave one. Because we can't forget that wave two is correcting wave one. So if it were to exceed that starting point, then it's not a wave two. And it's not correcting a wave one. So, you go back and you work and you figure your count. To accept it as such will invalidate your count at some point, if not right away. So, having said all that, let's go back down. So I will go back to this, and then here we have wave, intermediate wave 5. And now I'm going to come down to the daily, which is we have minor wave 5. So this is April of 2025, April the 7th to be exact. And so that from that point is where we started to come up in a minor fifth wave. So from April, so May, June, July, August, September, we've been 5 months in the making so far. And I think that we'll go 6, probably 7, possibly even 8. So again, we're approaching number one, the September monthly expiration, and then right on the backs of that, at the end of the month, is the quarterly end of quarter, end of the second quarter, and so there's an expiration that goes along with that. I believe this year it'll be on September the 29th. And then we will be into that fourth quarter, and I suspect that all of this rally is expected to go through or into the fourth quarter. Now, I look at this and I think, well, we're coming up in a minute wave 5, and within it, let me just go further. Okay, so here we have minor 5 consisting of 5 waves of minute degree. There's 1, there's 2, there's 3, and there's 4. And again, wave 4 was a rare Elliott pattern that's not super frequent, but you will find it. And I have to be honest, it's like it's so rare that I haven't counted one. And I've been doing Elliott since 1989. But here it is. And so that's why I went over it, and that's why I've had some challenges on it. I've gone back and I've researched further to see if there is indeed something that Elliott said, and there isn't. So I'm following Elliott's original works. I think there have been some questions in terms of how Elliott Wave International views it, and I'm like, that could be fine, but I'm using from R.N. Elliott, and he didn't mention anything about the different things that have come in as a challenge to that count, that wave pattern. So that's I am leaving it and I'm using it. And I've discussed how, and often when we get in irregular, or not in irregular, when we get a running fourth wave, it's quite often, or most often, it is going to be at the end of a large elongated. So in this case, it is a bull phase, right? We're finishing a primary third wave up. So the market truly has just been, since I think it's 2003, 2002, has been really working, definitively from 2009, has been working upward move, a bull market. And so what we're kind of coming up in and completing is that little bit longer term. So the market has continued to show its strength. And we definitely, from that April low, have had pretty much a very strong rally phase. So to find it here, it fits everything, including that the underlying strength in the market is remaining, and particularly here in the NASDAQ, because the NASDAQ is chock full of artificial intelligence, which just happens to be the flavor of the year. I'm gonna leave it at that. AI stocks again are very desirable to be held, but also stocks that kind of include AI or have an AI association have also participated in the strength of a lot of the artificial intelligence stocks. So that's what's kind of actually supported the NASDAQ more. And I think it could continue because it's not a it's not a sector that's actually going to go away. It's being developed, and each month almost there's such strong advancement within it that I think it's going to survive the best during this corrective phase, and that it may prevent the market from really dropping as far as some of the other indexes may drop. Okay, so let's go inside this minor fifth wave, and now let's jump and go all the way up to and take a look at from that this one from the bottom of the minute fourth wave. So there we have the running fourth, and now we're in that final four, which will consist of final fifth, which will consist of 5 waves of minuet degree, of which 1 and 2 are in, and then the market inside of minuet wave 3, the market has been subdividing. So it's really basically subdivided once, and now we're getting that internal 3 of 3 move. So it actually is 3 of 3 of 3. And I think today may have marked the high for the internal, the sub-minuet wave 3, the third wave completing inside. So it's going to be the sub-minuet degree. So it's kind of down there on the list. And so we have 1, 2, and 3. May have also completed wave 4, maybe, although it's just kind of a straight down and then a little bit of a rally. So it could be A, B, C, and that's what these markers are for. They're the fib support levels, and the first one's going to come in at 24,048, so 49, even 50. And that's sitting right with the 15-minute 50-period moving average. But also then right underneath that, we have the most common for a fourth wave, which is 38.2%. And that comes in at 23,993. So it's not actually expected to fall that deep. What it can't do is cross over 23,957. If it goes beyond, then wave 4 will overlap wave 1, and that would knock out this count or this labeling. So we have to kind of figure that one out as well. Now, also then what we're looking for is we get the fourth and then we get the fifth. That's why I've left this last 1.618 up here, because that would be for the if we have one additional move up, and I'm leaving it there to finish. Well, it wouldn't be finishing the third to finish the fifth, and it would finish this third. So once I get that fourth in, I left this here for the following reason, that I felt if we needed one more new high before this one was complete, we could expect to kind of rally back up 100 points and come up to this level, then put a fourth wave in. Otherwise, if this is the fourth wave and it's done and we start to rally, then I will be able to run that over to that fourth wave, and then we will get those fifth wave numbers. And the most common there is that wave 5 will be equal to wave 1. And you can see wave 1 is a fairly good size. So I'm expecting this whole thing to finish with something similar or exactly the same size, but to the upside. So beyond that, we have 1.618 for the subminuet wave 3, which this all will be completing at 24,311 or 312, 315. So we can build a little bit of a window there. And once I do have a markable fourth wave, and I can get that fifth wave, and then we'd be looking for another fourth wave, but within the subminuet degree. So we have a 3, a 4, and a 5 to finish this 3, and then a 4 and a 5 to finish the minuet wave 3, and then a 4 and 5. Then that should then complete the picture. We get a 4 and a 5 within the minuet degree. We're finishing minute wave 5, minor wave 5, intermediate wave 5, primary wave 3. So again, we got some upside numbers that could take us. I mean, I got them up to 28,000, but I think more realistic could be that minute wave 5 would be equal to minute wave 1 at 25,686, 687. You could even say 25,700 if it wants to poke its nose up there. Now, this fifth wave should be actually pretty large, and this is why. Wave 1, minute wave 1, was very large. I think it was like 2,000 points, somewhere up there. You know, and you can count it. So to connect it to there, yeah, getting up to this level makes sense. Make 2,000 points up from that level, 22,977. So it's 24,977 or 25,000, and you always have a little bit more. So it could just pop straight up there. Now, timing, of course, is the question, because I'm in that minute fifth, and that'll finish that minor fifth, and I don't have all that much left to go. And I'm thinking, is this going to last another month to 2 to 3 months? It could, but that's going to be it would be on the basis that we're going to see extensions, not only here within the third wave, but again probably in the fifth wave. So it can be out there. All right, so let's go over and take a look at the ES. And not the ES, Jesus, at the NASDAQ, the futures market. Been a long week. Futures market is basically the same thing, except we're a little bit different on our levels. So let me break this one down to the 15-minute chart, and let's kind of go over, because this one seemed a little bit clearer in terms of putting in that fifth wave up. And I'll tell you, this is where I will go down and use the line bar, because we had those spikes right in the middle there. I think it was a number. And then when you put it on the line chart, which is on a close basis, everything clears up. And you can kind of see it's like 1, 2, 3, 4, and then a 5. And it does look like it's pretty complete. And we're coming down in that fourth. We have markers at the 0.236 at 24,069. And then 382, which is most common, we have it down at 24,013, 14. Now, what I need to make sure that we understand, again, going back out to that hourly chart, wave 1, obviously because it's sitting up there, go back out to the bar chart. Wave 1 is at 24,050, approximately. So wave 4, I would not expect to come much below 24,068. Otherwise, I got to really kind of think about what is all of this. And what essentially is this third completing? Is it completing this one? Or is it just completing this one? We get a 4 and a 5. So that's why I was discussing that could be it. That could be the fourth. Maybe a little bit more. But if it is the fourth and we can put it down there, we're going to run that 1 over to the 4, and then we're probably getting up into here. So let's see if that can make sense. We come back from there, we go down, we come up to there, and let's just say that did mark the fourth wave right there. 100%. Wow, it takes us up pretty high. All the way up here to 24,402. That would be equality. Doesn't necessarily have to reach equality. We have a lot of other things in between. Like this guy, well, actually, 24,351, and this is 24,301. So yeah, this one could work. Down a 4, and then a rally back up to a 5. And then that completes this third. And see, we got a marker up there for it. So yeah, we could have a decent rally on our hands. And who knows what's going to be behind it? Look at what Tesla did in the last 2 days. That was up to $50. You know, and I'm sure there was a lot of it was expiration related. And but then again, we have a little bit larger expiration, supposedly, coming up next Friday. So what the market may or may not do is going to get interesting. And then we are pushing towards quarter end, which is beyond the September the 29th. So we kind of have a lot going on as the market prepares itself to go into the fourth quarter. So, and then believe it or not, right? We're immediately going to be starting, let's see, it'll be in October, like mid-October, we'll start earnings again. Is it going to be mid-October? Probably. Something like that, I think. I think it does happen sometime in October and into November. We start getting third quarter. So it just seems we roll from earnings cycle to earnings cycle to earnings cycle. And again, I think year end, I do believe that the markets, because we've been rallying so strongly, basically since October of 2022, I'm thinking that they may want to see 2025 go out at a relatively high level. And that would kind of be a marker, sort of. Now, we got something big happening next Wednesday, and that's the FOMC meeting. And the FOMC meeting, they're pretty much guaranteed or pretty much baked in, let's say, that we're going to get a quarter point cut. But I think the market could rally. But I think that could actually mark the completion point for some of these thirds. I mean, we can go all the way up and think that it could put the marker in for the minuet third wave. And that comes in up at 24,351. So we got a lot sitting up there. And if it really goes, we have 24,931 for a minuet third wave. So we got those two things, and we might hit that next Wednesday and then deal with a lot of things as we go into that expiration on Friday. But if that's only completing this three, and again, I don't know, I don't want to speculate out and say exactly what, but we still have this five to complete this three, and then a 4-5 to complete this three, and some active things, some market moving occurrences coming next week. We have a volatility expiration on Wednesday. We have the FOMC meeting on Wednesday, and those are the two big things. And then we have that larger monthly expiration on the 19th. Okay, so that's all coming in. And so I'm interested in getting this done so we can put our next level up and we can see how hard we're going to push. I actually think this three will be a four. We get that five in. We're looking up here. I actually think like 24,300 to 24,351 finishes this third. And we get another fourth wave. And it's going to be interesting because we're going to be buffeting up against the interest rates. So we're going to have a quick dip. Say we get up to here and we finish this on Monday or Tuesday, we have a quick dip. Or yeah, it's just that I'm speculating on what could happen, but we have to wait and see. Because I'm looking at this third could be the spike possibly off of an interest rate change. And then once we get that, then we get a little bit larger of a fourth wave coming down. And it could bring us all the way back into here. And then still get a fifth wave up, which now takes us into October, into October, November, etc. But as to timing, are we going to make it all the way out to there? I don't know. I see some difficulty, but we'll see. All right, that's actually all for the NASDAQ for right now. We continue to use gamma levels, and those will be reviewed on Mondays, on the morning update on Monday. And actually, that's it. That's it for this week. And the next weekly update, a weekly inclusion within the podcast, will be next week.